Hey, what is up guys, and welcome to a brand new YouTube video in this stock market course. And in today's video I kind of want to go over the MACD indicator, the benefits, why I don't use it, as well as the negatives. So let's get right into this video. I want to start off with just a quick summary of what we are going to discuss. What is the MACD indicator? What are the positives, the negatives, why I don't use it, right? But before you get into this video guys, hit that subscribe button, like, drop a comment if you want to see more videos like this. I'm going to try my best to give as many as possible so we can help you guys learn and see our thought process when we trade. Let's start off with what it is. So a MACD indicator is an indicator which helps people identify potentially a trend in price, to see if the stock's going to go up or down, a way to measure momentum. Again, this is used for potential entries, and again, in my opinion, it's best used for swing traders, best used for longer term charts, because it takes more time to kind of react, slower pace. So let's just discuss a few positives. A lot of people do use this as a confluence for swing entries. I highly don't recommend using it as as a way to just enter on its own, because you could get, there's a lot of negatives associated with it as well, which I will discuss in the next slide. So with this, just a couple of benefits I see, again, using as a confluence, or can you use to spot occurred trends. But again, nothing too special for me. However, with the negatives, I see a lot more negatives that outweigh the positives for me personally. As a trader, I don't want to see something lagging before price. For me, price will always come first, right? Price is always number one. Price will always go before any indicator, and that includes the MACD. The price will go first, MACD follows. So if price goes up and then down, MACD will do the exact same thing. So it's just an indicator created to never be wrong, even though it's like it could be wrong. You don't need it; it's just there. Again, it could give you false reversal signals. So just because the MACD is curling a bit, that doesn't mean it's going to reverse, especially if you're using it on its own. Again, it's subjective, and it will always be behind price. So let's just use some short examples today of why I don't use it and how I've traded without using the MACD. So I'm going to give you an example on GOVEX. I traded GOVEX all day today, right? And what I traded was a 50% move in the Discord today. We alerted this around this range here. We alerted it based on a nice 15-minute wedge. But let's just look at the indicators. So let's just add the MACD and see. Look, let's see now. What does this add to my trades, right? So yes, potentially I could get in here. So I didn't use the MACD today, but you could argue, oh, you could have got in here, right? Or you could have got in when it started to bottom out. But by the time this goes up, this trade has already broken out. It's broken out quite aggressively. That's just my opinion based on it. I was trying to see, okay, you know what, are there any benefits to this? But when I was looking at it, it follows price. Price is always first. And for me as a day trader, I want to be first. I don't want the indicator to make me lag with it. So get good at reading price, right? And look, without the MACD, let's just remove this for a second. And you can see exactly how I traded. Because I traded this in the Discord group. You could check on my Twitter and you'll see this trade of this today. So let's just remove that indicator. Just give me a second. So you got view up on bye-bye MACD. So when I traded this today, I'm just following price, right? I'm not bothered about no indicators, nothing. And there we go. We formed a nice trend on this, established a trend. And you see, look, every dip has been bought. Higher lows, again, give us a good indication of price. We also got a falling wedge, so we are anticipating a move before the MACD does, based on price. And we get in before the MACD does. By the time you get in with the MACD, the price is already broken out and it's already skipped an extra 10-15%, right? So let's just see some other ways, why I not use the MACD. So let's just switch over to another indicator. So let's use the MACD on this, and look, you see here, right? It's not really giving us any signal. And again here, okay, fair enough, it might be starting to curl up, but it's only doing it after price. And it's not telling us before price. Price will always tell us before. Yes, now it's heading down, but if it reverses, it can go back up. So it will always follow price. It's not telling us before the move, it's telling us after the move. And that is my main issue with it. But I'd make an argument for swing traders, right? With swing traders, it's usually quite slow. So they could get away with using it as a confluence. But for me personally, I like being before in lagging indicators. I want to gauge price, and more I do that, the better it gets for me. So I also want to go a couple more trades. For example, today, let's just see APD and another nice play. We do not need no indicators for this, nothing. This is why I don't use the MACD, I just use pure price. We see if we break over this key level. I mentioned it on Twitter, you can see it going through my charts. Close over 1.56, we based above and bam, 2.44. So again, you could have a lot of plays, and you don't need to rely on indicators to tell you what to do. And most of the time they will give you false breakouts, or they will get you in a bit too late. I hope you guys enjoyed this video. I hope this video helped explain why I don't personally use a MACD. To you that'll do, it's fine. You do what you prefer. But for me personally, clean price action would always be number one. Thank you guys for listening. I'll catch you guys in another YouTube video. Peace.